Ray, you say you are overweight equities, but are you at all concerned that this bull run might be getting a little bit tired, especially as we've got valuations so rich? We've got the ECB recalibrating, the Fed looking at tapering. Are we nearly done here?
Yes, those are very fair concerns, and we have thought about them in great detail. And in our opinion, a slight correction in the current environment is actually healthy for markets. A lot of that has been driven by the spread of the Delta variant, concerns on potential growth slowdowns and tapering on the horizon, like you have mentioned. But in our view, at least, going to the fourth quarter, we have a much more optimistic view. We think there'll be a lot more policy clarity. Taper would be likely be announced. We do see some form of fiscal support coming in. The US has to work through their spending bill on social and infrastructure packages that would add to further support. We do think that the peak of the COVID wave in the US will be behind us by the time we get to the fourth quarter, and that would definitely allow a reopening to boost the data to coming in. So we don't see a start of a down cycle. We actually do see a slight pause before markets continue to move up again.
Well, you sound confident that markets have priced in the taper. Have they?
So here's how we've read it in terms of how we're in our outlook on taper and what's potentially going to happen. If you think about when we went from markets that did not know about taper in June at the FOMC to markets knowing about taper in June in FOMC, markets have been well guided by the Fed, very well telegraphed on how things have been. We did not see US markets, we don't see Asian markets suffer from a knee-jerk reaction. So we do think markets are well behaved and will remain well behaved and well telegraphed. In terms of taper, our expectations would be potentially, given the slight softness in the data, Fed would be maybe a bit more patient, potentially maybe announcing a taper in December, potentially starting in Jan next year. And our year end, in terms of where we think 10-year yields would probably end up as a backdrop on the back of that, maybe 1.5% would be somewhere where it would be within reason.
Definitely, we're not seeing any sort of taper talk is in Japan, with the BOJ, of course, continuing to pump equity markets as well. Where are you seeing the rally going? How much of that stimulus potential, given the new leadership, has been already priced in?
Yes, we actually do see a bit more juice in the Japanese market. We saw quite a strong rally in Japan on the back of Suga indicating that he will step down and not rerun in the September party elections. So that has led to the first leg. What we think is going to likely happen in the second leg would be a slightly more further upside in Japan. This is going to be driven by a couple of factors. One, the LDP will likely pick a candidate that will be popular, because this will give them the best chance at winning the elections again in November. So they will pick a popular candidate, popular among voters, popular among business leaders. The second, as you have mentioned, that it would likely be a fiscal package rolled out during close to the election campaign. This will definitely help in terms of their campaign and votes. And then the third, Japan versus the rest of the world in terms of valuations aren't very stretched. So there's a valuation benefit in terms of rotation into Japan. And lastly, in our view, we do expect global yields to actually increase, gradually creep up. On the back of that, Japan has high exposure to value, high exposure to financials, increases in yields would benefit. So we do expect Japan to actually creep up. Slight pause now, but post that another leg up.
In your note, you say that you're short South Korea. Why?
Yes, it's an interesting one. So here's how we've seen it. First, in our view, the price of Korea in terms of the Korea equity market has run up way ahead of where earnings are. If you take a look of where Korea has run up since last year all the way to today, it's really outpaced where earnings are. Our outlook on earnings isn't as strong. It is predicated on our outlook on the DRAM manufacturers. We do foresee that the DRAM manufacturing prices to take a pause. It's had a sharp rise over the last 2 quarters. We expect that to moderate over the next 2 quarters. There has been, at least from what we've seen in our research, and slight oversupply to meet all the pent-up demand. We expect that to moderate, and we expect that to feed through into potential earnings. So on the back of that, earnings downgrades, downward revisions to earnings risk is high. And so we do believe Korea may underperform the rest of Asia on the back of that.